If you're planning to start graduate school, law school, or even medical school, or even help your kid pay for college, July 1st, just a few days away, could completely change your financial future. I'm Dr. Joe Oravec, and as a former university vice president, I've spent years watching families navigate financial aid. And I've never seen the changes this significant implemented this quickly. So, it's a lot of families that have currently enrolled students or have other peers or siblings that have gone on to college are operating under the old assumptions. And this is something that we need to be very familiar with, and a lot of people aren't familiar with. And this is what the One Big Beautiful Bill has actually reshaped federal student lending and repayment beginning July 1, 2026. And I think the biggest bombshell here is that the program many graduate students relied on, so I'm going to focus a little bit on graduate students and graduate students as well, but relied on to cover funding gaps of tuition and your living expenses is eventually disappearing. So, let's think about a student who started college in this past fall and a student who's going to be starting college this coming fall. So if you're sitting next to each other in a program, or orientation, whatever that might look like, um, that which student gets $35,000 in federal borrowing and which one gets only $20,000. The difference isn't income. The difference isn't grades. The difference isn't the school. The difference is the date that they started. So, again, as a former university vice president, I've spent years helping families understand financial aid. What I'm seeing right now is one of the biggest shifts in college financing in decades. So let's think about this. And most families think FAFSA, the federal aid free student application equals financial aid. Most families think if there's a gap, federal loans will cover it. Makes sense, right? However, beginning this July 1, there's no longer true for many students. And, parents will lose borrowing flexibility. Graduate students get hit harder. Some students could face funding gaps of 15,000, 30,000, even $50,000 or more. And the craziest part, two students sitting in the same classroom could be playing by completely different financial aid rules. So what's changing? And what I want to be very clear about is that FAFSA did not disappear. Pell Grants did not disappear. Federal student loans did not disappear. What actually changed? The borrowing structure is changed. Parent plus borrowing is changed. Graduate borrowing changed dramatically. So if you were enrolled before July 1, so this past academic year, fall 25, spring 26, families often assumed you get accepted, you complete the FAFSA, and federal loans cover remaining costs. For graduate students, you are able to receive direct unsubsidized loans plus loan, and you can borrow up to the cost of attendance. And generally, cost of attendance is your tuition fees plus any incidentals, living expenses, traveling expenses, all of that is calculated into your COA or your cost of attendance. So you could borrow up to that dollar amount. And each institution has what they have calculated as a cost of attendance. So the cost of attendance in rural Nebraska is different than cost of attendance in Boston, just because of the cost of living and such. So now, after July 1 of this year, new borrowing caps, new limits, more funding gaps, and more dependence on savings, scholarships, and private lenders. So Washington didn't make college cheaper. It simply reduced how much money many students can borrow to pay for it. So the winners? Students attending low-cost public universities. What does that mean? Lower borrowing needs, smaller impact. Students with major scholarships, less reliance on loans. And employer-funded graduate students, tuition reimbursement becomes much more valuable. Graduate assistantships suddenly look a lot more attractive. Even my graduate degrees, I was fortunate enough to receive graduate assistantships that helped with my funding. The losers here? Graduate students. Biggest losers for funding by far. MBA students, law students, medical students. Those are going to be in categories of professional loans, which will have a higher loan amount to be able to take. Private university students, much more loans. Families relying on Parent Plus. The key line here is that middle income families may be hit the hardest. They often earn too much for substantial grant aid, but not enough to write a $20,000 check. So let's kind of look about real dollar examples here. So before, and I'll give you a kind of an average cost to an extent of what's happening here. So before July 1, so last academic year, let's just say that a school attending to cost $45,000. Okay. Then you receive $10,000 in scholarships. So 45 minus 10 gives you $35,000. You're able prior to July 1, a Parent Plus loan, you could take out a Parent Plus loan for $35,000. The gap needed is $0. Now, starting July 1, same scenario as far as a $45,000 cost of attendance. Scholarship, $10,000. Minus all of that, your need is $35,000. However, now, as after July 1 and the big beautiful bill, the Parent Plus cap is not 35,000, it's $20,000. So there is a gap of $15,000. Nothing changed about the college bill. The only thing that changed is who has to figure out where the missing $15,000 comes from. So here's another example. 4-year family, meaning going on to 4 years before, borrowing $30,000 annually for 4 years. Financed $120,000. After the Parent Plus lifetime cap, so this is so you're able to get $120,000 finance. Now, after July 1, with that Parent Plus lifetime cap. So this is for your kid going through the lifetime cap is $65,000. That's it. Shortfall, $55,000. So you have a $120,000 need. Only $65,000 is available for a lifetime cap. What's the gap? $55,000. That's not a policy change. That is a family crisis. So let's talk about graduate students. If you're an MBA student, before July 1, it would cost $90,000 for an MBA. Federal loans you were able to apply for, you were able to get $90,000 in federal loans. What is your gap as far as need from year to year to year? In total amount, $0. You're going to just pay back that $90,000 based upon your respective loans. Now, for the cost after July 1, if you're a brand new MBA student, if you're going in and it's going to cost $90,000, your federal borrowing is limited. Your potential gap is between $40,000 and $70,000. Yesterday, the federal government financed the degree. That is before July 1. Starting July 1, if you're a brand new student, you may need private lenders, family money, or a totally different school. So let's look about this now that if you're at the same school and meaning in a different student, so let's just say that you started school last year and so you are grandfathered in to the former financial aid uh, federal limits and such. And so you have that if you are already attending, you have the other student, if you're just starting to attend, you are underneath different rules with more gaps and lower gaps. One student gets the old system, one student gets the new system. Same school, same major, same tuition bill. So how do you protect yourself? So you need to determine whether you're grandfathered in, if you're a returning student or if you're a new student. And so in asking, am I under the old borrowing rules or am I protected because I already started? Call financial aid. That is your next step. Ask specifically, what's my borrowing limit? What changes affect my program? And how much funding gap should I expect? You can see for a lot of the institutions right now, they haven't issued a financial aid loan just yet or your award offer because they're waiting for July 1, making sure because Washington needs to get its act together, at least what's the language that they're going to be using. So after you ask those questions, run the numbers again. Don't assume last year's strategy works. Compare schools differently. Look at net cost. Look at debt burden for you and look at your funding options, not just the rankings. And my last tip that I would recommend is build a backup plan. Consider scholarships, employer reimbursement, graduate assistantships, lower cost schools, payment plans. So, the biggest mistakes families can make is assuming the financial aid system they heard about 3 years ago is the same system that exists today. Graduate students face major new borrowing restrictions. Parent Plus borrowers face significant new limits, and families could be looking at gaps of $15,000, $30,000, and even $50,000 or more. The question isn't whether college is worth it. The question is whether families understand the new rules they commit to a bill they might not be able to finance. If you're a parent, student, counselor, or educator trying to make sense of the rapidly changing world of higher education, hit subscribe. Every week, I break down what's really happening in college admissions, financial aid, student loans, and higher education policy without the jargon, without the politics, and without the spin. Because when it comes to paying for college, what you don't know can cost you tens of thousands of dollars in the long run.